specifically its inflation data. Headline inflation over there rose to 18.17% in the month of March. That was about 82 basis points higher compared to the 17.33% reading seen in February. Now, the last time that Africa's largest economy recorded an inflation rate higher than 18%, you've got to go all the way back to January 2017. Headline inflation back then was 18.72%. According to the National Bureau of Statistics, increases were recorded in all individual consumption units that then feed into the headline index. On a month-on-month basis, the headline index went up by 1.5% in the month of March. Similarly, food inflation also went up by 5 percentage points to a reading of 23% at the end of Q1. South Africa, in the meantime, has extended by another 3 months the deadline for a loan scheme that is central to efforts to counter the economic damage inflicted by the COVID-19 pandemic. President Cyril Ramaphosa announced the bank loan scheme for businesses worth up to 200 billion rand in total, partly guaranteed by the government back in April. Now, the availability of loans in the scheme has now been extended all the way to the middle of July from an earlier deadline of the 11th of April. The extension is designed to enable an orderly winding down of the scheme and to assess the applications already received. The scheme's main aim is to encourage banks to lend even more and on more favorable terms to businesses that have been badly affected by the coronavirus crisis, which last year pushed the country's economy into its largest annual contraction in a century. Now, more than a year into the COVID-19 pandemic, some governments are calling for the introduction of a digital vaccine passports to jumpstart the aviation and hospitality sectors. Africa, collectively speaking, lags behind most regions in the number of vaccinations carried out, and a number of countries, including South Africa, are at risk of a third wave of the virus. Now, while people are beginning to travel yet again for both work and leisure, there is a fear, a nagging fear among developing nations that they will be left behind amidst calls for the adoption of these vaccine passports. With the story, here's CGTN's SUMITRA.
Talks of vaccination passports are already underway in most European countries, a conversation that South Africa can't engage in at this stage. Out of 168 countries that have begun administering the COVID-19 vaccine, South Africa places 79 on the list after vaccinating just 0.5% of the population. If the country continues at this pace, it could take 10 years before 75% of the population is vaccinated.
What we're waiting for is to get a large batch of vaccines so we can start to vaccinate a large number of people. Right now, we haven't even started. We just at the essential workers that are within the healthcare.
The vaccination rollout has been dealt another blow. The health ministry here has decided to stop the process for now after more reports of blood clotting in people overseas that received the vaccine. The government is heading up this rollout and prefers to be cautious, so no other vaccines will be administered privately. The health ministry also wants to ensure everyone is treated fairly in getting a vaccine.
So from the domestic side, we still need to think about it very carefully and make sure that we comply with the Constitution and to make sure that it's fair, because if you go and say that you're going to have a vaccine passport, but you don't have parity in terms of the distribution of vaccine from urban area to rural area, how do we deal with it constitutionally? And also, how do we deal with it if other people don't want to have this vaccine?
The tourism industry has reopened to local and international visitors, but 120 countries have placed restrictions on travelers from South Africa. This is because the 501Y variant was discovered here last year.
That's why I talk about the issue of parity. It will create a two-tier system. So again, to not have a two-tier system for us going outward is to make sure that there's enough vaccine for everyone. Internationally, already now, it has created an imbalance because rich countries and those that have developed their own vaccines that have been proven to be effective, have already started vaccinating, their citizens.
The vaccine passport may be an easy option for those countries with money. African countries without financial muscle may be left behind.
The global rollout is going to take anywhere from 12 to 30 months, according to the health experts. And therefore, we cannot have a global standard if there isn't equal and equitable access to vaccines.
Governments are desperately trying to get their nations back to normality, but are treading cautiously. SUMITRA, CGTN, Johannesburg, South Africa.
Now then, let's focus on the bigger picture across the continent. The COVID-19 pandemic has cut employment in sub-Saharan economies by over 8%. It's also returned 32 million people back into extreme poverty just last year. Now, those are some of the headline numbers in the latest review of the region's economic performance by the International Monetary Fund. It does make for fairly grim reading. In the early days of the pandemic, the fund forecast a contraction of 3.2%. It now estimates that the contraction that took place last year was just 1.9%, with the second half of the year being salvaged by a better than expected performance in sectors like agriculture, which were not as hard hit by the pandemic. Now, the number of countries at high risk of debt distress, though, is concerning. That has tripled from 2014 to 2020. Zambia, of course, does continue to default on its Eurobonds after the initial default last October. As the size of the job market in many economies in the region has contracted and net earnings are falling, governments have an increasingly smaller and smaller pool of funds available to stay ahead of debt service obligations. Earlier on, I spoke to the head of the IMF's Africa Department, Abebe Selassie. I started our conversation by asking him why it will take years in some countries just to get back to where they were in 2019.
We estimate that growth last year contracted for sub-Saharan Africa as a whole by 2%. This is by far the worst record, the worst on record that we can find. Now, it's slightly better than what we were hearing would happen, a contraction of around 3%, so minus 2% is still the worst, but somewhat better. This year looks like playing off the recovery that we're seeing in the rest of the world, and of course the easing of restrictions in our region. Also, the economic output should expand by about 3.5%. Still very anemic by our region standards. But perhaps more telling is really the incredibly awful effect that it has had on by pushing back some 30 million people back into extreme poverty in our region. Job losses we estimate of around 8% of jobs, and these are spread around the economy. Sectors that are heavily tourism dependent have been affected greatly, of course, but also there's a lot of effects on the informal activities. So really very broad hit to our economies and our people.
That 100 basis point delta you're talking about between the original forecast of a contraction of 3% and what we actually saw in 2020, that 1.9% contraction, was that essentially because we saw a recovery in some of the large economies and of course driven in part perhaps by the recovery in commodity prices as well for economies like Nigeria?
Yes, I mean the second half was somewhat better than we had expected. That was particularly the case in some of the larger economies, which, given their size, also tend to have a big effect on the regional aggregate. Less commodities and a bit more sectors like agriculture, which thankfully, have been spared somewhat by the hit that COVID has had in more urban areas, in more service and manufacturing type activities.
One of the other things that stood out for me was the fact that you're arguing that we might be back to where we were in terms of or per capita income only after 2022, in some countries much later on, 2023, 2025. Walk us through how that scenario was arrived at.
So, as always, sub-Saharan Africa, of course, it's extremely heterogeneous, extremely differentiated economies within that, right? And what we are, the way we prepare our forecast is looking at country by country projections, and we see a very diverse picture here. For the region as a whole, it will not be until well into next year before per capita income reverts back to the 2019 level. But within that overall picture, it's quite, there's quite a lot of differentiation. And what's worrisome is that there are 13 countries where per capita income will not return to 2019 levels until 2025. And that's about 350 million people that live in these countries. So really quite a big share of the region's population is not going to go back to enjoying the same standards of living for a few years yet. Of course, there are also some economies that are going to be set to rebound this year and reach 2019 per capita income levels as quickly as this year. And but it's still a very differentiated picture and a worrisome picture because there is going to be some drag from the effects of this pandemic.
Quick run through some company news. Let's start in the world of energy. Sasol has announced 2 hydrogen fuel initiatives as the synthetic fuels and chemicals giant tries to chart its course towards a low-carbon future. Now, the announcements come a day after the group launched a joint tender process to procure some 900 megawatts of renewable energy generation capacity. Separately, Sasol has also announced that it's partnered with Toyota South Africa to jointly pursue the development of a proof-of-concept demonstration for a green hydrogen mobility ecosystem. In banking, South Africa's third largest lender, Absa, is shutting down its 25-year-old money market unit trust worth about $6 billion. The bank has not given clear reasons for the closure, but it has hinted that some of its investors might have been using it as a bank account, something it was clearly not meant to be used as. The Absa money market fund's effective yield fell from 6.74% a year ago down to 3.8% by February. The social networking giant Facebook has signed a deal with the Indian firm CleanMax to support renewable power from wind and solar facilities in the country. Under the terms of this deal, Facebook and CleanMax will assemble a portfolio of wind and solar projects supplying renewable energy into India's electrical grid. CleanMax will own and operate the projects. Facebook will buy the power off the grid using environmental attribute certificates or carbon credits, if you prefer. And finally, the profits of the UK's largest supermarket chain, Tesco, fell by nearly a fifth to just $1.1 billion last year. That's after racking up over $1 billion in extra costs caused by the pandemic. Tesco says exceptionally strong revenue grew by 7% to $73 billion in the year to the end of February, but pre-tax earnings were down by nearly 20%, following a number of pandemic-related costs, including giving full pay to staff off work, ill or shielding. That's it for your company news wrap. You're watching Global Business Africa. Time for a short break. Here's what's coming up next. South Africa finds itself without an active vaccination program after stopping the use of the Johnson & Johnson jab. And the cryptocurrency market Coinbase is the talk of Wall Street as it debuts on Nasdaq.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is SUMITRA. Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back to the program. You're watching Global Business Africa. Now, Moody's is forecasting that the global metals and mining industry's earnings will increase by roughly 30% through to the first quarter of 2022. Now, that's off the back of a strong economic recovery, as well as rising demand and tight supplies in some specific commodities, steel, iron ore and copper in particular. As the constraints from 2020 to ease and production returns to somewhat normal levels, Moody's is arguing that demand will recover more slowly for other commodities like aluminium, for example. It's a key metal for the global aerospace and automotive sectors. Nickel and zinc supply is also expected to increase, so markets on those three will likely be in surplus. The robust recovery of China's industrial activity has also led to a surge in demand for metals. China accounts for roughly half of global consumption, especially of industrial metals. So let's dig a little deeper into this story. Peter Major is a director at Cadiz Corporate Solutions. He joins us now live from Johannesburg. Peter, good to have you on the program tonight. Would it be fair to say that this is mostly a China-led recovery?
Yeah, it's not quite fair. China is leading it. That part is very fair. But the rest of the world is catching up. And we know demand in the rest of the world fell harder than in China, and it's picking up slower. But the rest of the world is going to be another 50%, and it is gaining traction. So you're correct in saying, Rama, it is led by China, but boy, these other 50% of the world is coming up quick, fast, and hard.
Okay, so Moody's is also forecasting a much slower demand recovery for metals like aluminium, sorry about that, compared to other industrial metals. But why is that happening at a time when we're now seeing that remote work and flexible work days seem to essentially become the norm? I mean, that theory would suggest that people might be moving around a bit more than they used to in the past.
Yeah, I agree with you, and I think it's hard to say why the base metals are lagging the iron ore and the platinum group metals, because those are opposite metals on the spectrum, right? You know, the whole platinum group metals, you're dealing in ounces, and in iron ore, you're dealing in billions of tons. And it's funny, those are the two metals that have gone berserk, that have gone in the stratosphere. Copper is the only base metal that's really running hard above its long-term average. Aluminum, nickel, zinc, even tin, which is doing very well, they're all trading a little above the norm. They're trading at good levels, but only copper is trading way above the norm. I think we can attribute copper to the energy, whether it's storage or transmission or going into electric cars. Iron ore, why is it trumping aluminum? It's not so much that the demand for aluminum has fallen. It's just that aluminum has huge supply. It's always had huge supply out there. So even if a couple of countries that supply the bauxite had dropped off, it's so easy for them to add another couple dump trucks, another shovel crane. Aluminum is a real bulk material. It's mined very shallow. It's mined on large scale. And you don't need to transport as much. Iron ore, you're talking billion and a half tons that have to get shipped to China. So it's the infrastructure of iron ore. You can mine a lot of it, but it's the infrastructure to move it. You only have to move 40, 50 million tons of aluminum bauxite ore. China, iron ore, you have to move billions of tons. But look, they're all recovering because production did fall in 2020, but demand has held up stronger and has taken off faster than the demand can catch up.
Okay, so
then the production can catch up. Apologies.
Indeed, and that production catch-up thing is something we've been discussing in the past. But let's look at specifically South Africa's mining sector, because the top line numbers look relatively good, relatively attractive. Revenue up almost 40%, dividends up 133% compared to 2019. But that's the top end of it. But what kind of damage are we not seeing that was inflicted by the pandemic?
You're bringing in a very important point, and I hope the politicians are watching your broadcast, because they're the ones that need to open their eyes. Prices have covered up the destruction and the problems below. So it's not that demand for PTMs are really that much higher than before. It's just that supply couldn't keep up with the little increase in demand, and supply did drop off during the virus. epidemic at first. So these prices are masking a fall in production. And South Africa has a fall in production in everything, even the PGMs. Its iron ore is way down. But because the price is 3 times higher, that masks the production that's down 15, 20%. And the same with gold, and the same with all of our metals here. And so when these prices start coming a little bit more to normal, then it's like you're pulling the curtain away. You're going to see who doesn't have the clothes on. And that is so important. And you have said, what is hurting here besides the virus? And this virus was a good excuse for South Africa to say, this is why our volumes are down. But our volumes were going down before the virus. They're continuing to go down, and they're going to go down after the virus because we have huge underlying problems here. We have huge policy problems that discourage investment, that chase away foreigners, that make even the locals reluctant to increase capex. And we have transportation problems with railroad, with roads, with harbors. Electricity problems are huge, and everybody knows about that. So yes, these high prices are helping us, but we got to take advantage of high prices to fix these problems. They're going to hurt us when the virus passes.
Indeed. Let's see how this does play out. Peter Major, always a pleasure having you on the program tonight. Thank you. Now, we're still in South Africa, of course. The country at this point in time, Africa's most industrialized economy, finds itself without an active COVID-19 vaccination program. Now, remember, this is essentially a country that did halt the use of the Johnson & Johnson jab. The country's drugs regulator says it had recently reviewed data from Johnson & Johnson's local research study immunizing healthcare workers, but it didn't find any major safety concerns at that point. South Africa did, however, join the United States in suspending the use of the J&J vaccine after 6 recipients in the US formed rather rare blood clots over there. South Africa had already ditched the AstraZeneca vaccine, which was found to be inadequate, apparently, in dealing with the existing dominant strain of the virus. The J&J and the Pfizer jabs were found to be a lot more effective against the prevailing variant. Let's hear now what South Africans think about these latest developments.
I was initially disappointed, and I was disappointed largely because I had understood that the US had specific reasons to pause under a particular context, and that is that they have other options in terms of vaccines, the Pfizer and the Moderna that they are rolling out, and they've already rolled out millions of vaccines.
I was also thinking of actually taking this vaccine at some point in time. But after that, obviously when I heard about the suspension of the vaccine, I'm now going to have second thoughts. I was willing to actually think about it, but now that it's going to create clots in the blood and all of that, I'm thinking about my health at the same time as well.
Still in the Southern African region, Malawi will have to dispose of roughly 16,000 or so COVID vaccines. Officials there say that the AstraZeneca doses are about to expire due to reluctance among citizens to take the jab. The doses are among the 102,000 that had been donated by the African Union just last month. The health officials in the country say inoculations were rolled out from the middle of March. The aim is to vaccinate 11 million people by the end of the year. So far, though, half of the 530,000 vaccines from donors have been administered. Coronavirus infections in Malawi have been relatively low, but there's been a surge since the start of April. The country is now at about 34,000 cases. It has recorded above 1,100 deaths. That's according to the African Centers for Disease Control and Prevention. Many people on the continent have also resorted to self-medication in order to treat COVID-19 symptoms. Most prefer, in fact, to use concoctions made from ginger and garlic with a combination of antibiotics in order to deal with the symptoms. But as CGTN's Enoch Sikoli now reports, some have found out the hard way that these remedies and drugs being sold over the counter could actually be making them a lot worse.
In the outskirts of Kenya's capital, Nairobi, Emmanuel Atamba and his wife, Mercy Atamba, are tending to their small garden farm. A venture they started days after recovering from COVID-19.
What we went through was really terrible. It was very scary.
Their experience with the coronavirus began after they started exhibiting COVID-19 symptoms. Subsequent laboratory tests only confirmed their fears.
And we went into treatment, the whole house. Of course, the kids were also showing symptoms. But the basic medication, of course, what they say, you know, you take the ginger, lemon, garlic, and turmeric. That is really what really helped us a lot in the initial phase. We were also given immune boosters.
Placed under home-based care, Atamba relied on recommendations from recovered patients. One drug was heavily mentioned, azithromycin.
When I went to the doctor, I asked what I can use. They also recommended the same, and they said if you have chest pains, you use azithromycin. But of course, there was really not much information exactly about how to use the drug, how much of the drugs to use. It was just 1 tablet per day, but not clear for how many days.
This nearly cost the life of his wife after 10 days of drug taking.
She started feeling weak, she had a headache, she became dizzy, and she was really struggling to breathe. And it was very scary because we opened the windows and it couldn't work. We went outside with her, sat outside with her, it still could not work.
Atamba decided to rush his wife to hospital. He feared that COVID-19 may have damaged his wife's lungs. But he will come to learn that her problem was not caused by COVID-19, but the drug that she used. She was simply showing symptoms of azithromycin overdose.
And he asked me, had she finished the dose? And then I was surprised because I didn't even know there was a dose.
Azithromycin is a 3-day dosage drug supposed to be administered by a qualified physician, but the family had bought theirs over the counter at a local chemist. Experts say self-medication is a practice that is on an upward trend on the African continent, especially during the pandemic. The Kenya Pharmacy and Poisons Board says self-medication is leading many not to having proper medical advice when needed. And some practitioners warn that self-medication could create a bigger problem in the future.
We are having a situation where diseases that could be treated by simple antibiotics, the antibiotics no longer work.
Doctors in Africa say a majority of COVID-19 patients placed under home-based care usually opt for self-medication once they exhibit flu-like symptoms, only to have their conditions worsen.
COVID-19 is a virus. Antibiotics are not indicated in the virus situation. The instance when we use azithromycin is specific. Doctors understand what it's being used for in particular cases, not for every single case of COVID-19.
With COVID-19 still spreading across the African population, doctors are advising anyone with symptoms to seek medical advice first before embarking on any treatment. Enoxikolia, CGTN, Nairobi, Kenya.
You're watching Global Business Africa. Time for a short break. Here's what's on the other side. The U.S. climate envoy John Kerry is in China for talks on climate policy. And Spain's road to economic recovery has been dealt a blow after it paused the use of the Johnson & Johnson vaccine over blood clot fears.
Business in Africa is at the crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what do you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Welcome back to the program. Let's look at some of the stories making headlines at this hour. The African Centre for Disease Control says that the continent lags behind most other regions in COVID-19 vaccinations. To date, less than 14 million doses have been administered on a continent that's home to 1.3 billion people. The majority of the vaccines available in African countries have been delivered through the World Health Organization-backed COVAX facility. The doses are AstraZeneca shots produced by the Serum Institute of India. But just last month, India suspended exports in order to meet rising domestic demand amidst a surge in COVID-19 cases over there. Health officials in Malawi say the government will have to destroy over 16,000 expired COVID vaccines that were donated to the country by the AU 3 weeks before their use-by date. The Southern African nation received 102,000 doses of the vaccine developed by teams at Oxford and AstraZeneca last month, but 16,400 were not administered before they expired. Malawi's launched its inoculation campaign in March with the aim of immunizing 11 million people, roughly 60% of the population, by the end of the year. In North Africa, Egypt has imposed a number of restrictions during the month of Ramadan, which started this week on the 12th of April, due to a recent surge in COVID cases. The government has cancelled late-night tahajjud prayers and seclusion in mosques. The move comes as Egypt's daily infections exceeded 700, setting a new record since the start of the pandemic in the country. And finally, the United States has issued a range of sanctions against Russia. It's also expelled some diplomatic personnel from the country's mission in Washington, D.C. The White House says the sanctions are meant to target the Russian economy for interfering in last year's election and for launching cyber attacks. It says the move will affect individuals and private companies. The announcement comes just days after a phone call between the leaders of the two countries. Russian authorities deny all the allegations. That's a run through your headlines. On to the business of climate policy now. The U.S. climate envoy, John Kerry, has met his Chinese counterpart, Xie Zhenhua, in Shanghai. The talks are focusing on areas of potential collaboration between two of the world's largest emitters. Kerry is the first official in the U.S. administration, the Biden administration to be specific, to visit China with some relatively high expectations. Here's Xie reporting from Shanghai.
Behind me is the Dongjiao State Guest Hotel where the talks are taking place now. All morning we've been seeing vehicles in and out, and there are actually quite a few media outlets around. So interest is high in these talks. And given the fact that Kerry is the first Biden administration official to visit China, there's been a lot of speculations as to whether the two sides will talk about issues beyond climate change, but that's something we can only wait and see at this moment. So far, we know that Kerry is in Shanghai at the invitation of China's Ministry of Ecology and Environment. And according to an official statement released by the U.S. State Department, the climate envoy is here to discuss raising global climate ambitions ahead of the U.S. President Joe Biden's Leaders Summit on climate next week. Now, China has yet to confirm its participation at the summit, so that's very likely something the two sides will talk about this time. And Beijing also said the two sides will exchange views on the upcoming United Nations Climate Change Conference scheduled in November in Glasgow. Although bilateral collaboration in this field has taken a nosedive under Trump administration, which also saw the U.S. withdraw from the Paris Agreement. And now that climate change is back and high on the Joe Biden's administration's agenda, it remains to be seen whether and how the two sides will continue and resume their collaboration in this field.
South Korea's President Moon Jae-in has ordered officials to explore petitioning an international court over Japan's decision to dump treated but radioactive water into the ocean. Japan unveiled plans on Tuesday involving more than 1 million tons of contaminated water, those used to cool the reactors at the Fukushima Daiichi nuclear plant. Now, the Deputy Prime Minister of Japan, Taro Aso, says he's heard that treated radioactive water is essentially okay to drink. Japan's Reconstruction Agency also released a mascot for the radioactive substance tritium. It was removed later on, however, due to criticism. Japan's decision has drawn widespread criticism both at home and abroad. South Korea summoned Tokyo's ambassador to Seoul, Koichi Aiboshi.
The Japanese government's decision is absolutely unacceptable. The decision to release the Fukushima tank water into the sea not only threatens the safety of neighboring countries and the marine environment, but also is a measure unilaterally decided without sufficient discussion and agreement with our country, which is the nearest neighboring country.
The cryptocurrency platform COINBASE, you might recall that firm, we spoke about it extensively yesterday. It was the talk of Wall Street overnight as it made its stock market debut on the Nasdaq. The move was done through a direct listing where no shares were sold ahead of the opening. John Terrett has the details from New York.
This was a hugely anticipated IPO at the Nasdaq in Times Square. It legitimizes for the very first time cryptocurrencies. It moves for the first time a cryptocurrency company into the forefront of Wall Street activities. Cryptos are now playing with the big boys and girls here in New York. Now, what can I tell you about Coinbase? It was formed in 2012 in San Francisco, so 8 or 9 years ago. Today was, if you like, a coming out party for the company and also for cryptocurrencies and those that have supported the idea for the best part of the last 10 years. Now, as you know, not everybody supports the idea of cryptocurrencies like Bitcoin and Ethereum. Some link them to illicit money, by which they mean terrorist money. Others say, well, look, this is the future. The growth potential is extraordinary. It means reform of the entire global financial system potentially down the road. And the blockchain will become the dominant force in financial dealings in our future, and that it could help countries like Africa and Latin America, where there are unstable banking systems in some countries. Blockchain and crypto could overcome all of that. But the detractors say, look, what happened to Bitcoin in 2018? How much did it go up? And the evangelicals for cryptos have to admit that Bitcoin went down by about 75%. Those are the two arguments. The future, growth, reform, versus very real concern that this is all happening too quickly and is too unknown. Now, we've had some big IPOs here recently. Uber valued around 75 billion, Airbnb around 40 billion. I think this IPO of Coinbase is now valued around $85 billion, and it's the first major direct IPO at the Nasdaq in Times Square. So how did the company get on day one? We had thought it would come out valued at around $250 per share. In the end, it came out at $381 per share. It rose by 50 or 60% within the first hour, but then settled back to close ahead by 31%, or $328. John Terrett, CGTN, outside the New York Stock Exchange.
All right then, so Coinbase is now a public company, but why does that matter? Why is it so important? Well, it's the first cryptocurrency platform to go public, to list on the Nasdaq, and its performance will be very closely watched as the industry is hoping it will open the floodgates for crypto transactions. Here's CGTN's Mark New with this report.
We first visited Coinbase's headquarters in 2013 when they were just a fledgling startup betting big on a mysterious concept. They were helping companies set up payment systems that would accept Bitcoin.
Yes, it's scary because it's new, and there are new security concerns that need to be addressed with it, but that's sort of where I see Coinbase coming in. It's the sort of consumer-friendly front.
Coinbase's strategy has paid off as it's become the U.S.'s biggest cryptocurrency exchange and the first crypto company to be listed on a U.S. stock market.
So Coinbase is the NASDAQ for cryptocurrencies. And what you have to think about is, there's tons of cryptocurrencies. And the question is, how do you trade against that? And that's what Coinbase does. And they did a lot of business. They did $1.8 billion worth in Q1 alone. Last year, they did $1.14 billion. And so the rise of cryptocurrencies means all their money is derived from transaction fees. It legitimizes the cryptocurrencies that are out there and allows you to convert cryptocurrencies to other fiat currencies.
Coinbase has its own cryptocurrency called a USD coin, or stable coin, because it's one coin for $1 US. It offers a digital wallet for storing cryptocurrencies and is available in more than 100 countries. The author of Blockchain Technology and Applications, Ahmed Benafa, says Coinbase and its investors will continue to take on plenty of risk.
They have almost 56 million users, only 4 million of them active, monthly activities. So 4 million, about 7% of them, they are really making these kind of activities on the exchange. 56% of the trades of the $335 billion is done with two types of cryptocurrencies, Bitcoin and Ethereum. Now, you can think about what kind of risk they are facing. Look at the swing of the values of those cryptocurrencies. What are you going to do? If it's went down like what happened in 2018, that's going to have tremendous impact on their revenue and their business model.
The world's most popular cryptocurrency, Bitcoin, was created by Satoshi Nakamoto, whose true identity remains a mystery. It's believed Satoshi owns more than $50 billion worth of Bitcoin. In a filing to the U.S. Securities and Exchange Commission, COINBASE mentioned Satoshi several times.
The inventor of the Bitcoin, Satoshi Nakamoto, that person or persons or he or it or whatever is the identity of that person, whether it's a government or a person or organization, that entity holds a big chunk of Bitcoin. That's really one of the risks that we have seen it when I read their S1, the filing for the IPO. They say, what if this person decided at one point to cash out all the Bitcoin? What's going to happen?
But it's a risk millions of people appear willing to take in hopes of bridging the gap between digital currencies and traditional ones that you can hold in your hand. Mark New, CGTN, San Francisco.
All right, so let's get away from the business of cryptocurrencies. On to Spain now. The road to economic recovery there is up for debate before Parliament. Any plan would also need approval from the EU before billions in relief funds can then be released. Now, the political debate followed this week's huge blow to Spain's vaccination plan due to the pausing of the use of the vaccine developed by Johnson & Johnson, again due to fears about blood clots. Here's Rahul Pathak with the latest from Madrid.
It's definitely a setback. Spain was looking at the introduction of the Johnson & Johnson jab to really give its vaccination program a huge push. The reason being that it involves just having the one dose. So obviously you can administer the drug to far more people far quicker. Now they were due to start using the one dose vaccine to the 70 to 79 age bracket, and all being well, initially that would be expanded to the rest of the population. So ministers admit that the suspension of the J&J vaccine will, of course, it will cause uncertainty amongst the public, but the fact that they have received such a high volume of the other vaccines says that they're pretty confident that they are optimistic, they said, of reaching their targets. Remember, today in Parliament, building behind me, Pedro Sanchez reiterated his government's target of saying that he wanted 70% of the population vaccinated by the end of July. Pedro Sanchez was speaking in Parliament both yesterday and today. $167 billion in EU funds. He said it's going to deliver the greatest economic transformation we've seen in 30 years. He's unveiled the guidelines of the spending plan, which is really meant to pull this country out of the economic crisis that it's found itself in, primarily because of the coronavirus pandemic. Interestingly, the funds haven't been ratified yet by the European Union, but Spain has already earmarked where that money is going to be spent, and a big part of that, $15.7 billion, will be used to boost electric vehicle production. Electrifying transportation is one of the 20 flagship investments that Spain plans to make over the next few years as it really tries to modernise its economy in the post-pandemic world.
A Dutch travel company has launched a holiday experiment plan on the Greek island of Rhodes. It's an attempt to look for various possibilities to reboot international tourism, which is stalled for the better part of a year now. Stefan de Vries reports from Amsterdam.
Almost 200 lucky people are gathering at Amsterdam Schiphol Airport to go on a vacation to the Greek island of Rhodes. The travellers are part of a test by Dutch tour operator Sunweb to see if it's safe to travel again. It is not your usual holiday, explains Sunweb's CEO.
It differs almost in everything for a normal trip. It starts that they have to do a PCR test 72 hours before departure, and then they had to do another rapid test.
Thousands of people trying to get in, yet only 187 could finally go on the trip.
We were really afraid that maybe nobody would apply, and we were really surprised and a bit caught off guard when more than 25,000 people in the end registered.
Participants paid $475 for all-inclusive access to the pool, restaurants and other facilities, but nothing else, not even the beach. They have to respect the 1.5 meter social distancing and wear a face mask, but that doesn't seem to bother holiday goers.
Well, that's all we can get right now, so we will enjoy it. Yeah.
Very happy. Been a long time since we've been on holiday. So let's see if we can enjoy it, even with the restrictions we have.
At the end of the holiday, there are still some more rules to respect.
And then when they go back, again, there is a PCR test 72 hours before departure and another rapid test on the airport. And then at home, they have to go 10 days in self-quarantine unless they test 5 days after arrival and the outcome is negative, then they can go out again.
It may all sound complicated, but if this test goes well, European holidays could be back again.
And we're all hoping that this summer will at least bring the start of that rebound we've seen in other places in the world, like in China, like in the US, and hopefully we'll see the same here in Europe.
Stefan de Vries, CGTN, Amsterdam.
On to the business of art now. Paintings of some of Europe's most famous artists have come to the National Gallery of Australia. The show is named from Botticelli all the way to Van Gogh. It's the first major exhibition in Australia since international borders were shut down last year. Take a look on what's hot tonight.
Without needing to travel to England, Australians can see some of the masterpieces from London's National Gallery. The exhibition features 7 defining periods of European art history, starting in the Renaissance.
This really is a roll call of the most important artists of Western art history. Many people will have travelled to London, they would have gone through those galleries in the National Gallery, but they've never seen them here in Australia and displayed like we've displayed them.
One of the highlights of the exhibition is Vincent van Gogh's Sunflowers. It has attracted many visitors to take photos or selfies.
Vincent van Gogh, there's something about those sunflowers that even if you've seen them before or you've looked at his work before, there really is something incredibly compelling about these paintings.
Works from other famous painters also include Botticelli, Rembrandt, Vermeer and Goya, not to mention Renoir.
Many of the works look like they've just stepped out of the artist's studio because they're lit by the best technology available.
The exhibition, which was delayed a year due to COVID-19, is the first international touring show put on by London's National Gallery.
Every single step of the way has been carefully orchestrated, from the crating to the transportation to when the works arrive in the building and how they're then put on the walls.
The exhibition will run until the middle of June. Lin, CGTN.
All right, then a quick run through commodity prices. We spoke about metals outlook, at least through to the first quarter of 2022 a little earlier. Copper and platinum prices today both up by roughly 2%. In fact, at these levels, they've recovered rather nicely. Copper forwards in London up nearly 17% so far in the year. Platinum not far behind, almost 12% in the green. Crude, however, eclipses both of those gains. Brent and WTI are both up nearly 30% on a year-to-date basis. In East Africa, a Kenyan newspaper, the Business Daily, is reporting that authorities intend to open a bidding round for oil and gas exploration blocks offshore around the coastal town of Lamu. To be clear, though, this is the area in question is not the offshore sections. It's under dispute between Kenya and Somalia. Here's what's coming up next. Coming up next, we'll show you how solar-powered tech is helping rural communities get access to clean, reliable water in Uganda.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN. See the difference.
Welcome back. Let's head over to Uganda. Many rural communities over there do face challenges in getting access to clean drinking water. In fact, only 68% of rural villages have access to a safe, reliable water source, according to the country's Ministry of Water. Now, a non-profit is helping rural communities get access to clean, reliable, portable water using solar-powered digital systems. Isabel Nakiria has that story on Grassroots.
Christine Nachibuka now taps water with a swipe. She's using a digital system that involves loading credit on a token and passing it through a payment system to allow water to flow. Residents pay 2 cents for a 20-litre jerrycan of water, which they say is affordable.
They really helped us. We are no longer suffering. We don't even think about having to walk down the well to fetch water.
Christine's family and millions more live in Uganda's water-stressed areas. She says life was tough before water was brought close to her home.
Imagine we used to walk up this hill very early before we go to school every day, yet we would take 2 routes. Sometimes we ended up being late for school.
According to the Water Ministry, only 38% of the people in Christine's district of Sembabule have access to clean water. This water source has for years been used by both humans and animals. It's not only safe for drinking, but it's also far off. People have to walk over 2 kilometers to access it. The government drilled boreholes in the area, but many broke down. Water Campus, an NGO working to improve access to water in rural communities, is modernizing the broken boreholes. It's replacing hand pumps with solar-powered pumps and supplying cheap water closer to where people live.
We also use a solar-powered digital payment system so that people receive an individual token that they can load credit onto, so that at any time during the day or night they can come and collect water without having to disturb anyone to turn on a tap or have to travel far down to a hand pump.
The organization has built 3 water systems in 3 districts so far, each costing $30,000. The project leaders say the system is reliable and residents are assured of constant water supply throughout the year. The climate in Sembabule is semi-arid, meaning not much rain is received here. The community in Christian's village is lucky, but millions more still don't have access to clean and safe water. Isabel Nakiria, CGTN Sembabule, Uganda.
One last story for you in the hour. This one from South Africa, where close to 2,000 endangered Cape cormorants are being returned to Cape Town's Robben Island. They've all been successfully rehabilitated at a local seabird hospital after they were earlier found abandoned on this island. CGTN's Travis Andrews has that story.
After 3 months of rehabilitative care, these Cape cormorants are amongst the first to finally set foot back on Robben Island. The seabirds were being cared for at Seabird Rehabilitation Centre, SANCOB, who received them when they were just dehydrated chicks. Researchers discovered them abandoned together on the island after the adults failed to return from their search for prey at sea. Now the first lot of healthy Cape cormorants are being returned to the island by SANCOB researchers.
We release the birds. Before we release, we obviously check that they're all healthy, that they have the right weight, that they're waterproof, and then when we take them over to Robben, they're under enclosure for 2 days, and then they're being released, and then they're being observed by our staff on the island.
So far, around 640 have been taken back to their colony, while the others are still being cared for at SANCOB Seabird Hospital. Seabird rangers stationed on the island, though, have been monitoring the well-being of the rehabilitated flock.
Looking at if the birds are integrating with the wild ones, of which that is important. We're looking at monitoring if they those that are kind of like weak, and then sending them back to SANCOB for rehabilitation again.
Cape cormorants are also considered as endangered, so maintaining a healthy population on Robben Island has become a key conservational issue for seabird researchers. One issue that remains critical to the sustainability of the seabird colony on this island is the amount of food around the island, and scientists will have to monitor those fish stocks carefully over the next few months.
The next fish survey that is run by government will be in May or June. So then we know how much fish is around at the moment. But seeing that we are seeing large flocks of cormorants at the moment in all our bays shows that there seems to be fish around.
For now, though, the seabirds seem to be settling in well, and all indications are that the entire rescued flock will make a successful return and reintegration on Robben Island, which is important to boosting their very low numbers. That's Andrew, CGTN, Cape Town.
All right, then a quick run through the currency. So the rand's ascent does continue today. It's taken its year-to-date gains against the American dollar to nearly 3.5%. On the crypto side, Bitcoin still pretty much holding orbit around the $62,000 level. The Naira has found its footing somewhere around 408 to 410 to the dollar, at least in the interbank market. But the macro data coming out of Africa's biggest oil producer is still pretty grim. Headline inflation close to 19%. Growth in 2021 forecast to be way out of what is ideal for the country. It's estimated at 2.5% by the IMF. And remember, that comes in the wake of a contraction of 1.8% just last year. That's it for this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen on the program in the last hour. There are many ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.